Good evening. It's Wednesday, March 13th, 2024, here at PreciseAlgorithmTrading.com, and I'm going to try to buzz through a market review and do a little education here tonight, just because I think I got the right tool to do it with, and show you guys the VIX. Hopefully, I don't forget to do that. This is our automated trading system and systems. There's three of them here that we show. And this is the Dow futures, and I think that's a sideways move for today after it bounced yesterday. And so there you go. One negative trade, nothing to care about. The Russell had one negative trade today, and that's about the limit of what that thing does when it goes negative. 8 in a row. That's a stat I could probably go find in the strategy itself. There's probably something like 12 in a row, so it could go worse, but that is a pretty. That's come back, almost too far for certainly for my liking, but it's going to bounce anytime now. And then the Nasdaq's holding up great. Put in new green dots, and it's just sitting up there for now, going back and forth a little bit. We had some negativity, and then we took it all back, which is great. So this is how these trading systems are supposed to work. You get into a new series of this, and it's like what happened back here and back here. So, and you just take off to new higher highs in your equity. So that is all good. Let's flip to manual trading. This is the S&P 500, and we have this thing. Let's see what the SPX. It went actually negative 9.96 points today, which is nothing. It had a lot of volatility in it for what it did, and no big deal after a big day like yesterday. The Dow actually went up 37 points. We're at 39,043. Let's look at that thing, because it moved higher, and I'm going to keep beating the drum that it is going to 40,000. That's my take on what's going on here. We have positive structure over here on this side, so bullish, higher highs and higher lows forming, break a structure here. If we break this to the downside, then that would be a major change in polarity, but I don't see that happening anytime soon. The Russell today, let's put in IWM, I think went down just a little bit. No, it just went up a little bit, 0.39%. The Russell's zeroed out here because it's a little bit later than I usually get on. But then the Russell's well, they're all a little positive overnight here. The Nasdaq went down 87 points, or 0.5%. There was a lot of volatility in that one today. I shouldn't say a lot. I mean, I think at one point today it was down like 160 points, which are, it feels like a lot when you're in the middle of it. The transports went down 0.39%, and they're still in this sideways range unless you look at the actual ETF, which has been going higher on today. In the last couple days, it's actually on a pullback. So I find that not tradable, because if the ETF and the index don't line up, I got a problem with that, and I'd rather just stand aside. Oil went higher today, USO. So this is one of those situations where I got stopped out and I just decided to run the other way. so be it. I will get a different opportunity in another day. Gold GLD is going to just continue to go back and forth probably for a while. Similar to Bitcoin, different but similar, where once you get onto one of these, it takes a lot to unwind. A trend doesn't give up without a fight, and a major trend like this certainly won't. You get the pullback, and then you just get taken back with the trend, which is great. That's kind of what our system's all about. So, all right. The lesson for today. Here is the McClellan oscillator, and this isn't the lesson. This is just look what's going on. We've got a pattern that was pretty much a upward sloping channel. Now we've gone outside of that channel and we've gone into a wedge pattern. Now we've gone outside the wedge pattern. So this is turning into what looks like a blow off top. You can Google a blow off top, but usually what happens is it's a unsustainable move that almost goes vertical, and at some point it hits the top, and then we'll get a major reversal off of it, but not before we go, a blow off top. So what if I put in YM just to see? We're not there with the YM, which is interesting because it's the one that I'm expecting to go to 40,000. Now the YM is at 39,552, while the actual Dow itself, $DJI, and these symbols are only for Thinkorswim. They're different in different platforms, but you can see here we're at 39,000. We got to get all the way up there for the actual Dow, the one that they talk about on the news. So they're discombobulated right now, which is weird. Now let's talk about the VIX. So the VIX blew out here, screwed everybody up for a bit, keeps going higher, and now it's down here. It looks like it might want to pop again, but this is where the lesson comes in. I'm going to flip back here. It's going to make this the VIX, and we're going to look at the trade for the VIX, and we're going to go 6 days out here on an option chain, and we're going to look here at the calls just outside the money are 37 by 46, and just inside the money on the put side is 60 by 69. So if you look across here, the 14 strike price of the VIX 6 days out is, we'll call this 50 cents and we'll call this 60 cents. So they're almost even. So there's really not necessarily a major advantage in either direction. Although you could say the puts are actually priced higher, which shows you there's a potential maybe for the puts. That's where the money's going. More of the money is going to puts, so the VIX should go down. When the VIX goes down, typically the market goes up in 6 days, the next 6 days. If you go 13 days out, 56 by 95 and 53 by 92. This thing looks like it's going to be sideways for a bit. When the things get really out of whack, you can actually watch this, and when the call side is like $1.50 and the put side is 25 cents, you can start looking for the market to where if the VIX is going to go higher, you start seeing the pricing go that way, and you can pretty well bet on eventually the market's going to catch up with that, and you're going to get a slam in the market. So we'll watch that for a bit because I think it's a worthwhile venture. If we go out 20 days, is it different? There you go. $1.50 by 54 cents. So 20 days out, they're expecting the market to pull back. That's where the money is going. This is just following the money. This is for the VIX to go up. Calls mean that the bets are going to where the instrument's going to go up. Puts mean that it's going to go down. If you go 20 days out, they're priced 3 times to the upside. So we'll watch that. That can like switch because these things are fluid. They change really every day. But that's the lesson for today there. Thought it'd be helpful. And we'll go to stockcharts.com. And we'll type in, well, actually, let's go here to point and figure and go to the bullish percent indexes. The industrials didn't move. The NYA up 0.77%. The transports up 8.33%. Pretty bullish. The NASDAQ minus 0.49%. The S&P 500 up 0.55%. The S&P 100 flipped to a new column of X's, up 4.48%. The NASDAQ 100 didn't move. So there's a lot more bullishness still under the hood there, if you're asking me, and that's what our assessment shows. So hopefully it helps, and that's what we do every day. So next time, I guess we'll see you next time, and until then, take care and have a great night.